Hello, everyone. Good morning. Happy Monday morning, March 14th. How's everyone doing today? Hope everyone had a fantastic weekend. By the way, if you are new here, please do consider subscribing, ring that bell, and hitting the like button. Longer term viewers, hit that like button, leave some comments. So, just a reminder consumer inflation expectations come out at 9 a.m., and then we have the 3 and 6 month Treasury auction bill coming through, but that is not going to be the most important thing. The most important thing is going to be the scrolling by Russian-Ukraine headlines, and then we're going to be prepping for not the rate hike because that's already pretty much baked in. It's going to be what the Fed has to say, but that's not till Wednesday. That is not till Wednesday. So you still have the 95.9% odds of a rate hike. It's pretty much baked in. So that's it. Hey, good morning, Ken. Market looks red. It pulled back a bit because it's still scrolling. There's peace with Ukraine. There's war with Ukraine. Again, it's going to keep keying off of that. And we'll go through what I'm watching for. Again, I am watching for a short-term bottom to be put in sometime in the next couple days. So, and then that would just be short-term. Again, all bets are off. Right now, there's major pullback in China. China's having a lot of problems with their markets, and I expect that to be substantial impact over time again. And we are in longer-term bearish mode, but you can still get bounces. Also, commodities pulling back a bit, even with the Russian headlines, gold, silver, and crude. I started talking about that yesterday. I am watching for a bigger pullback in some commodities and then re-entry signals. So keep that in mind. Good morning, Tesla Force. Good morning, Options 22. All right. So thank you for joining me this morning. Let's see where we sit. S&P, you can see, again, we're pretty much flat. We're still up from Friday's close, and we rallied a bit overnight and now flattened out. You can see here's your 1 hour chart. Trying to get up into this clear path and then this strong reversal about the latest Russian headlines. Where I am watching, again, is if we start breaking below Friday's lows. You can really, I'll get a warning sign if we start getting below about 41.93, 41.92, but then Friday's lows are very key. So that's what I will be watching for. And until not getting on the bullish side this morning, unless we get above 42.40. And just because I'm expecting a short-term bottom to come in does not mean we just buy willy-nilly. We wait for some price action confirmation because, again, everything's trading and you got the algos doing the scanning headlines and when stuff comes across. And now you do have additional pressure from what's going on in China. By the way, also in Germany, wholesale prices year over year. This is not a pretty chart. Inflation is major. Look at this. You haven't seen that since the early 70s. That is absolutely brutal. So we're still going to have inflation pressures, even if they pull back slightly. That's going to hit stuff, and we'll take a glance at the DAX too. Good morning, Tim and Terry. Hope you had a wonderful weekend. So remember, key levels so far, roughly around the highs, which is a daily rotation zone. So above that, I am then watching into this clear path move right up here. Still 42.55, and then above there, I'll be keying off about 42.83 to 42.86. And then I'll be watching about 43.07 if it can get a rally on. By the way, you can also use your short-term harmonics for key levels to ratchet up stops. So that gives us a cluster area in there. And if we break down, again, for the S&P, I'm watching the Friday low area and that harmonic. We break down minus 41.77, and then my major area is 41.55. If we start going through there, 41.38, then the possibility of 4100, and that's not just for today, that's over the next couple days. And even if we do push down, we could have some very strong short-term entry signals to the upside for a bounce. But until, again, that's nothing we front run, we wait for those signals to occur. Nasdaq, I'm not keying off of Friday's lows. Those have already been breached. I'm really keying off of last Wednesday's lows, the 9th, with this harmonic area about 13,205, 13,200. Below there, 13,132 to about 13,101. And then through there, then I will watch for the lows on the 24th of February. Remember, Nasdaq is the weakest in all of them. You can see also with this, you can see that overnight price action, sort of a horizontal channel, could not get above this 13,431 level and rolling back down on the Russia headlines. So keep an eye. My level that I'll be watching is this 13,430 area. Above there, you have a clear path move. Still then going to target 13,619, then up to 13,786 if it can get the rally on. But Nasdaq is looking very weak this morning, so it has to prove itself. Dow. Also, we still have this confirmed double. Dow holding up. I'm bumping this level down a bit. But if we start breaking down towards 32,842 and that breaks, you have this little mini clear path back to 32,530. Then this double is off the table. All right, above your first sign on a rally about 33,300, 33,310 area, and then the double comes back into play. You don't have any clear path moves, but you do have a confirmed, but not triggered on the 4-hour basis. So that's what I will be watching for, especially if we do get a rally on. I'm watching for a 4-hour close above here. Your targets, I just have the harmonics on those. Those are minor, but I'm really focusing on about 33,815, then 34,36. And that's right at the top of these candle bodies. So that's this end of this little move up here. So keep an eye on that to the upside. Russell, just glancing at that again, break below about 1975. Then I'm targeting lower, minor break. Here's your minor level. A break above 2020, more significant up. DAX is still up. You see up on from Friday's close and can't get through the rotation zone yet. You have major topping pressure up here, but if DAX can get above about 14,100, it could make a pretty quick run higher short term. And where's that run higher? I'll start watching between about 14,300 to about 14,360 with that weekly rotation zone. Let's check in on the VIX real quick. Again, on this platform, I don't have, it's delayed by about 15 minutes, but VIX is still relatively subdued, up slightly. But there's no fear. You want to start watching for short-term fear mode. If we get above 34, I'll be starting to get in short-term fear mode, and then above 37.50, it gets more substantial. But until that happens, not much. By the way, I did talk about what I'm watching for if we do get a rally on, and this just isn't for today. I'm watching for a potential very short-term rotation into some mega cap and growth stocks. Very short-term. I talked about my reasons behind that yesterday, but we have to get the bottom potentially in. Crude bouncing slightly, but dipping into closer to the the final target on this double. So still keeping an eye on that. But you see, watch today if it does pull back again. 103 roughly, it closed below 103, then it's below the daily rotation zone, and we continue to watch for that bigger pullback. I've updated the harmonics already. On any rally, you can see, start watching 109. If it can't get above 109, it can just stay in this flat zone. But above 109, then I am watching for about 113, 113.50. Your major area before I can get strongly bullish would be 120 again. All right, but this does favor a continued pullback, and you might wonder, well, what's if with the whole Russia situation, crude got a little overdone and can still technically pull back and form another base for another push higher. So you still got to trade the technicals. Short term, if you're watching something intraday, because you're managing other crude-related instruments, keep an eye on crude above 109.50. You start getting above 109.50, it could be actually a short-term pop back to that 50% from this rundown. But that still is not long-term bullish. We could again get the other push lower. Gold, which triggered that head and shoulders, you see pushing down. Nowhere near, I talked about yesterday, I'm watching for the pullback to especially reload on gold. Key areas about 1940 to about 1931 on a break lower, and then 1905, and then if it got down to 1877, that would literally be a gift. Silver starting, which did not trigger the head and shoulders, but starting to roll down now, and now it has on the 1 hour. So at this point, what I have to do is find the other anchor point for it. Where is it? There it is. So now we have to move this over to where it broke the neckline right there. So now that is anchored. So now we have our official pullback targets in silver. The first one being, and that's the one I'm really focused on, about 24.77. Let's see, notes. Again, push lower, broke last week's lows, coming down. You see the harmonic here, a slight bounce just in front of there. If it now, this area of support is now resistance. Okay, got to change our harmonics around too. So the first little resistance area you see here is 12.5% retracement with this little base. So my first area of resistance is about 125.20. To 125.21. Push lowers 124.23. And dollar, we still have a potential topping pattern in here. Even if it slightly pushes higher, we do have a potential pullback in the dollar, which I'm keeping an eye on, but that's below the March 10th low. Wavy, welcome, welcome, welcome. Apple at the 200-day and pre-market. I'm really interested to see where that hits, and that's one of the ones I'm watching for. Should we get a bounce? It's pre-151, and there's also issues because you have China locking down the province that Apple does a lot of its stuff in, so that is going to hurt Apple. But again, I will watch to see where that closes in relation to the 200-day. Now, if this starts breaking down, especially below 152 on a closing basis, that's not one of the mega caps I'm first turning to play if we do get a short-term bottom. By the way, next major support level is 148.13, but Apple could get some punishment today. I was watching this in relation, but if it gets below that 200, again, it's a zone. So if it gets below the 200, really focus on this spike low from 24th of February because that's more key, but this is a zone. You can see here, this technically held. Why I say it's a zone, let me show you something. You see how we came down and held this gap below and held this, and even with this close below, it couldn't break below this key low. So the 200 would have held for me. All right, the last time we really broke the 200 was briefly, and that was this brief little, that was the COVID response. The last time we broke naturally was back in May of 19, and then prior to that, November of 18. So this is very key. So even if it dips down here and closes like at 152.5, it's still not really broken. It's trading in this zone. Really start watching for that close back below 152 because this was a very key line in the sand for Apple. Mike, are the probabilities of hitting agent same as the probabilities for hitting the doubles? No, they're different. Would you consider MSFT triggered? Microsoft on the longer term, yes. Microsoft is triggered, so this is a very long-term pattern though. So again, I'm also very long-term bearish on the microcaps. And this is virtually triggered. It's confirmed. It's virtually triggered. I mean, I'm doing a flat neckline because technically you have a downward sloping. So on a flat neckline, it's virtually triggered. Again, bearish long term. We'll watch. This is a potential play. If we do get in that bottom and Microsoft can get above about 290, it could make a short little term pop back to 300. So that would be a short term play only if we start getting the bottom in the market. Other than that, not touching it, pre-market up slightly, but that really doesn't bother me. We're still in Friday's areas. These are short-term little pop plays. Now, again, we don't get that bottom in the market, not looking to touch it at all because it's back to the downside, but my key levels really are watching on a closing basis, 24th February low on a you have this little spike low from the 9th of March, but really on a closing basis, I'm watching this key level 271.50. Well, Wood declined to be interviewed for this article. Those close to her say she is fielding multiple calls a day from financial advisors and investors to convince them to stick with her. It's still, you put in that last week that you still have, where is it? ARC, people have not given up on, which is, they'll keep, this is where the dip buying mentality is still there. You have net inflows January, February, March. You had a little redemptions in November, December, but then you had net inflows. So overall, people are still in full-blown buy the dip. And in ARC, we've now hit the next cluster area officially. So below here, 52.43, 52.50, and then 40.51. Now, key resistance is this prior area. So even on a bounce, and if we do get that short-term bottom, 64.50 is now the first level of significant resistance. And by the way, we don't have any double bottom patterns. Sterling, welcome, welcome, welcome. India, Russia, China, and Iran are working on switching to gold-backed currencies to use as international settlements. How would this affect the price of gold if they are able to do it? Again, I am very, 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 very bullish on metals and especially gold. And I think silver will play a catch-up. Silver, I think, will outperform gold in when we do get another pop. But gold, longer term, I could see gold $3,000, $3,500 an ounce right now, 1970. Short term, we could get that nice little gift of a pullback. So as I've talked about before, I love to trade this stuff around a core position, all right? Like I love to trade the Sprott Physical Gold Trust, and this is to trade around core positions in here. So unwind some, pull back some. See, I got alert set here until we really get out of this range. And then you start getting above this. If you're trading PHYS, which again, above 1650, I'm going to really start letting stuff run and more aggressively buy on pullbacks. But you can see, here's where I use these harmonics. And I'm going to set up some kind of course on here. It's using harmonics to do buying and sell because you can harvest things like gold in this range and trade it back and forth until it really gets the move on. And then you sit with your core position and add to it on pullbacks. But until there, gold has not gone anywhere, but there's tons of harvesting to do. And I'd really, if you're looking to play this in stocks, PSLV for silver. Another great way, harvest back and forth, watching for that other pullback. And once silver can really start getting above in this, about above 10 on a closing basis, I'm getting really bullish on silver again. That's not the price of silver. That's the price of PHYS. PSLV. So again, back to Sterling's comment. Yes, longer term bullish on gold and silver. And also, just for something else you might want to watch, if you look at the gold-silver ratio, you can see, now they can both rally, but at some point I'm expecting this to return. And here's with the futures. Look at this. Silver is relatively cheap compared to gold, so that's why I will play silver. You're at long-term potentially ratio bottoms, so silver could outperform to the upside. That doesn't mean gold won't run. They'll both run, but you can have a bigger pop in silver. So that's a great little thing to keep in mind also. With that, let's see what else. Let's just peek at Tesla. I know people watch Tesla and trade Tesla. Tesla pre-market down 7.8 to below the low from the 8th of March. So I will watch for that potential gap fill play, but breakdowns, next level 772, 761, but you start getting a close. If you get a close below the 771 area, it favors a retest of the lows. What do I think about banks and XLF? I did my sector overview yesterday. Sector overview in the XLF, very close to a long-term sell position, but nothing yet. You have things like Citibank that is really exposed to the stuff going on with Russia, so I would not touch certain banks at all. And banks have to be as strong. The only things I'm touching are strong outperform on a daily basis. And even if we do rally in XLF, I'm now watching for the longer term breakdown pattern. But like Citibank, this is something we're now down in here. We do have this little on a daily basis, a potential double, but that would require a close above the high from the 10th, and that would just be a short-term pop play. They've got some significant, I think there's going to be longer term fallout with Citibank. So even returning to these areas, and it is against the daily rotation zone for that little pop play. So unless you're a very nimble trader, would not touch it, because longer term, you're into this major move, and we could easily see prices like for Citibank back to 46 in the next few weeks. BAC, we've already triggered. Remember, this was a valid double. Already hit the first target, and so longer term, even on these pops, see back to the daily rotation zone. Even if it popped back up here to 42.50, it'd just be a return to the declining other end. There is nothing for me to do with back from the bullish side, and if it does break down below these lows of 40, you're going to watch for a quick gap fill. Then below these lows of 38. 36.95 and then 35.07. Now 36.95 would be my major target because of this significant bottom, but you then, if we don't get a hold there, then I will focus on 35.07. Ken, that would be individual trading advice. PSLV, again, it depends if you have something or not. I'm watching for, we could pull back to this 880 level, but it depends. If you already have a position, it's different than, like, I'm trading around a core position. If you already have a position, then it's different than if you're looking to the first ad. If you're watching for the first ad, if you're watching for anything to get into silver, just start really focusing on the price of silver. And if we hit about 24.70, then I look at PSLV or wherever that's trading when we pull back to this 24.70. Start watching that. All right. With that, I'm going to get prepped. I have 4 minutes till market open. Thank you for tuning in, everyone. Again, market overview this afternoon. Hope everyone has a great trading day. Again, S&P up about 35 basis points, Nasdaq down about 20, Dow up about 60. So really focus this morning with the first little opening range of if these key support levels hold. With that, again, you're welcome, Wavy. Good luck out there. You're welcome, Dennis. You're welcome, Michael. And I will chat with everyone later. Bye for now.